Asian markets are largely mixed, but largely on the higher side as well.
Blended realizations, quite impressive out there for a company that's not yet got their FSA price increase.
Most of the cream was in the middle itself. We saw solid margin performance. Well, if you just take a look at the revenues of the company, 4,023 crores.
Supports for the Nifty come in at 18,042 and 18,000.
ABFRL got the better end of the stick because the shareholders of TCNS will receive 11 shares of ABFRL for every 6 shares that they hold.
The first tick on the index, not bad at all. In fact, 40 points higher on the Nifty.
I think India is, I wouldn't say decent place, but obviously better than what the rest of the developed markets are going through.
We have accelerated our store growth.
Right.
We opened the highest number of new stores in a year, which was 71.
The market's on good autopilot mode, on the way up, smooth trajectory, and led by the Nifty Bank.
To start adjudicating the show cause notices on import IGST evasion.
Markets at midday doing extremely well. We have a double century on the Nifty, 200 points, 18,276.
You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. Last hour of trade coming up. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Afternoon.
Hi, afternoon.
Afternoon.
Monday blues?
Good session, huh?
No Monday blues.
No Monday blues.
There's no blue, right?
There's blue and red there, but yeah.
Well, we've completely erased the memory of Friday and how. So it was just like shrug off, move on. And it's almost as if it never happened. And this is the point that we were discussing with our guests in the morning, the point that we're making as well. HDFC was a large reason. I mean, actually single-handedly took the market down, and then it kind of dragged everything else down. Banks mainly took it on the chin on Friday. Today, all of it has been reversed, and it's a decent, nice, smooth rally that we've been having from the word go. And same is the case for the Bank Nifty as well. The Nifty is above 18,167 levels, which was last Thursday's high. Friday, of course, when there was a washout, Nifty lost 1, Bank Nifty lost about 2.25%. Bank Nifty is yet to come back to those levels. I mean, on the banks, because the fall was sharper, it's only recovered about 75% of Friday's cut. The resistance is 43,740, which is another 1% away, about a little over, maybe a little less than 1.25% or so. So some more work to be done there. I looked at global markets. By the way, NSE advanced decline ratio is not all that gung-ho. While indices are doing well, it's 1:1. And it's been that way for the last few hours at least. So there is enough happening on the downside as well as which we will discuss. Global cues are, and price action is largely quiet. Europe mostly is higher. US equity futures are flat. The dollar index noticeably is down about 0.25%. So I think that is something which actually stood out. Out of the US, we will get a fair bit of data points through the course of this week, and I think we will map out the journey. But for now, I mean, it's a decent, smooth-looking picture, taking out the immediate resistance for the Nifty, and I think on the Nifty at least, around the 18,250, 18,300 kind of levels is where the next cluster of resistances starts to come in, which is, by the way, not very far away. Guys, hi.
Hi, we were actually in a pretty good groove, right, till Friday happened. And just got to see those two stocks, it spoiled the party. And now, as you said, we've completely erased the memory of Friday and we're marching on. Sectorally, it's banks and autos leading from the front. So the Nifty Banking Index is up 1.5% and the Nifty Auto Index has a gain of over 1%. In individual stocks, it's IndusInd Bank, Tata Motors, Bajaj Auto in the Auto Pack. HCL Tech in the IT Pack is leading up. On the losing side, you've got Britannia. Britannia opened at pretty good levels, but from there, Britannia slipped quite a bit and is now down nearly 1%. So those gains have been erased. But anyway, Britannia was at a record high level. Canara Bank initially reacted negatively to its earnings, but then there was a sharp spike in the numbers about 10 minutes back. So the losses, which were about 1.5%, are now down to 4.5% are now down to just about 1%. But it's so much about individual names, right? Today, in terms of earnings to watch as well.
Well, that's right, Reema. The good point is that we were seeing call writing for the last couple of days, but in an uptrending market, you want to see some signs of put writing. So at the end of today, we'll be looking at the institutional flows, how much the FIs pump in, what kind of activity from the DIs, because on Friday, the net institutions were net sellers. Now, today, you're seeing a good amount of open interest built up, both at the 18,200 as well as 18,250 put. uptrending market, you want to see put writing closer to the nearest possible strike. So it seems the bulls, they believe they're still in with a good chance to go towards that 18,500 odd mark. What's going to be crucial now is that tomorrow we have the Nifty Financial Services expiry that will play out. That's a weekly expiry. And if that goes in their favor, in the bulls' favor, then we're definitely going to be heading towards that 18,500. So the last 60 minutes close is going to be important. It's been a good session so far. The Nifty Bank has bounced back as well. Let's see whether or not we can end, on a high. But for the time being, well, let's find out how do you position yourself in the final hour of trade. Mitesh Thakkar is back with us. Well, Mitesh, if you're brave enough to buy that dip on Friday, well, we'll be quite happy because you're making some good money. The question is, what do you do from here? We're running into that resistance level. Take some money off the table or continue to trail the stop loss.
Good afternoon, Nigel. In fact, we didn't buy the dip on Friday, and we had exited, on Thursday around 18,250 odd levels, and then the entry didn't happen. So unfortunately, this time the index positions aren't there. But broadly, I think what is important is that we are now trying to get past 18,250 zones, and looks like, in case we sustain about this 18,250, 230 level, then I think we are looking at a test of 18,400, 450 zones as a minimum, maybe a short at 18,550, 600. So stay positive. I think on the stock side, a lot of stocks are breaking out with this kind of market momentum. And I have a couple of power names. Earlier we had buys on cement names. So now I think NTPC is a buy with a stop at 174.5 for targets of 182. And Power Grid is also making a fresh high. That's a buy as well with a stop at 241 for targets of 255.
All right, Mitesh, thank you very much for that. We'll come back to you for more in terms of specific stocks, etc. Now we're going to address Bajaj Finance, which is up about 5% or so. There's a Morgan Stanley report addressing the stock, and the reaction is there. Abhishek is here with the details of that report. Abhishek, what are they saying?
Well, there is a roadshow that's happened in Singapore, and Morgan Stanley has written on Bajaj Finance Singapore's key takeaways from the meeting. So they have an overweight rating with a target price of 8,000 per share. The key takeaways are that AUM growth will be around 28 to 29%. That the management had guided in after the Q4 results as well. Long-term AUM growth target remains at 25% to 27%. They have recently entered into new products to finance, like new autos, tractors and the MFI portfolio, which are high-yielding assets as well. So these new portfolios would form around 7% to 8% of AUM in the medium term. So Bajaj Finance also plans to expand its branch counts in gold financing. Currently, they have it at around 180 branches, which they will expand to about 500 to 600 branches. But they will also bifurcate. That is, they will go into 10, 12 states so that there is no regional concentration risk over there. So B2B disbursals market share is already at 50%. It was at a low of 44%, and they intend to take this share to 54%. So they have refrained from commenting on any competition from Jio because they don't know the products that Jio will be taking in their portfolio. And they expect cost of funds to rise by about 70 basis points in FY24. So 40 to 50 basis point decline in net interest margin is what they are guiding for FY24 versus FY23. On credit cost front, they have said that they will be in FY24 around the FY15 to FY19 average, which is about 1.45%. And SDFC Limited merging with the bank provides them ample opportunity on the liability side with respect to bond market and deposit taking abilities for an NBFC. Back to you.
Okay, that's what the management had to say in a non-deal roadshow in Singapore. Abhishek, thank you very much for highlighting. Just adds to the kind of optimism and the guidance the company had given post their numbers. AUM growth of more than 25% is what they've pegged for this year, FY24. Dilip Bhatt is here with us. Dilip, Bajaj Finance, every dip has been a buying opportunity. The stock is still about 15% away from its 52-week high. Do you find the stock attractive from here on? And what can drive a re-rating in terms of valuation multiple? Or do you think the valuation multiples are close to peak?
Well, the challenge certainly is from the valuation front, without any doubt. I think we are seeing a lot of shares with a very high P. In this case, it's not a question of P, but price to adjusted book is what we are talking about. I think it's pretty high, And the challenge is whether it will continue to get a better multiples from here on, because we all know that for at least the next few years, I think the bottom line growth will continue at 25%, and possibly as what the management has guided, that even the AUM growth is going to be very solid. The question is whether this kind of valuations will get any better from here. My own sense is that I will be waiting and watching. I will not be in a hurry to buy the stock from the current levels, because I think the valuation headwind continues not just for Bajaj Finance but for all high PE stocks. And in this case, it is quasi high price to adjusted book. So I will say that I will not be in a hurry to buy. Of course, if I'm having, I will hold on. So I will still wait for the markets to be in a better position. And because that I find it very challenging to give a high PEs to some of the stocks. And that is where the challenge comes.
Okay, all right. Hi, Dilip. Good afternoon. Thanks so much for joining in. Well, just keep an eye out on a few stocks in the broader market. Some of them saw a sharp correction, but they're popping up in trade. Ami Organics is now up close to around 4.5%. You had Pyramid Pharma as well. That's been, it's I think close to around a third of what it was at its peak. That one as well has spiked up in the last few minutes all. And Manappuram Finance as well, steadily it's been moving up. Dilip, what about Manappuram? What do you make of the recent news flow? And how would you approach the stock?
I think the markets did react to the recent news flow that really happened. From the current levels, I would say that Manappuram, I will not be in a hurry to buy this particular stock from the current levels. And I will still wait for things to get a lot more clarity on some of the things. And looking at maybe the next 2 years growth, especially the AUM growth and particularly the ROEs, I will say that I will still prefer to wait and watch as far as Manappuram is concerned. And as far as Ami Organics is concerned, I think that stock really holds a good promise over the next 15 to 18 months, because they are doing a lot of all the right things that needs to be done, the acquisition which they have done, where I think the margins, the EBITDA margins will keep on expanding, and possibly the introduction of a couple of new products, which also holds a good promise. So from the current level, Ami Organics, I think still appears to be a good investment bet over 15 to 18 months.
Dilip, hi, afternoon. What else? I mean, give us a few more ideas from the mid-cap space, mid-cap, small-cap space.
Well, I think, some of the stocks that we have discussed, they are mid-caps. And I think we certainly feel that some of those things are good. I think Bajaj Healthcare is another stock that needs to be looked into. Maybe there could be short-term bumps, I think some headwinds. But I think on a longer-term basis, Bajaj Healthcare looks pretty interesting on a longer-term basis. I think even IOL chemicals and pharmaceutical looks pretty interesting, considering the fact that the ibuprofen prices and paracetamol, they got some permissions. So I think that stock looks pretty good. I think even the profit growth should be very solid based on the fourth quarter results that we have seen of IOL. So a couple of these names just do come to the mind. I think Voltas looks pretty interesting from the current levels. I would say Voltas also merits a look. I would say that next 15 to 18 months should see a very solid growth for Voltas and for the entire industry in that particular space. But more so, Voltas looks pretty interesting. So these are some of the stocks that I will look at from the current levels.
There's 45 minutes to go for market closing, and things are looking super solid. 200 points, and this has been a good day because it's not as if we gapped up 150 and then did very little after that. It's been slow and steady, and the markets moved up from the morning upwards. I mean, slow, gentle incline higher. There's some news at the bottom of the screen. This is from Bloomberg Wires. Brookfield is set to consider sale of over 10% stake in Indus Tower. This is information coming in, and we'll add more perspective on this in just a bit. Stocks reacting a little bit on the downside, 1.5% or so lower. Abhiram Eliswarupu is head of India Equity at BNP Paribas He's joining us to take some questions. Abhiram, good to have you with us here. Thank you very much for your time. I just want to start with one specific segment, if you have any thoughts. The home financiers, and that too smaller ones. There are 2 or 3 of these names which come up in discussion often. Home First, for example. I don't know if you have active coverage on any of these. There is Aptus Value. There is Aavas Financiers. I mean, all in the, making loans of between 10, 15 lakhs, the bulk of it. Any thoughts on this segment? Stocks have not done very well over the last couple of years. I mean, at least Home First has not. 3 years now, stocks been flat. Growth rates have been pretty solid. Any thoughts at all, Abhiram?
Hi, Prashant. On that segment in particular, I don't recall having done a lot of in-depth work on this. That said, I think one of the things that you may see going forward, something that I had mentioned to you previously as well, is that investors have historically, at least in the last year or so, focused on absolutely only the large cap financials, certainly in banks at least. It's only now, that is the last month or so, that they're starting to spread out a little bit more. Look at a slightly smaller names as a consideration set. So if indeed the numbers are as good as you say, then the chances are that they've just been off investor radars. But it's not a space I've done a lot of work on.
All right. Hi, Abhiram. Good afternoon. Thanks so much for joining in. Abhiram, I think you were in the camp who was saying in the second half of this year, with the 12-month time horizon, you believe we'll be closer to around 20,000 odd mark. Seems we are moving in that direction, even after the 6% rally that we've seen from the recent lows. Do you think we have enough to do another 10% from here with the 12-month horizon?
I think when I was here the last time, I did mention that we've turned a little more positive on the markets, generally saying that the downside may have been kind of done. Looking ahead, I think our Nifty target is around mid-19,000s. So that would suggest a high single-digit upside from here. So there's not a whole lot of change in that thinking. Now, what would have happened in the last month or so is that investors would have considered the results with a bit more, granularity. And broadly, even though we've had a few disappointments, especially on IT and maybe consumer staples, it's been kind of offset by other segments, certainly the financials pack. So that view is relatively unchanged. Still see high single digits by the end of the year.
Autos have also done relatively well, Abhiram. At least the numbers that we got from Bajaj Auto, Hero MotoCorp was not a bad showing. TVS Motors was quite strong. Any thoughts on autos?
In autos, again, we take a slightly longer term view. We still like the four-wheeler companies more than the two-wheelers. We certainly think that EV is a long-term disruption risk for the sector. That said, we've also not seen a whole lot in terms of rural improvement. So even if we do go for names within the two-wheeler pack, it will be most likely the ones that sell higher-end models. So that more or less remains. Now, what's happened in the past month or so, apart from the results coming through, also is that on the EV side, you've had some disruptions, certainly on the production side. And as a result, that threat will seem to have dimmed a little bit. But these are temporary issues on the production front. And I think that over the next few months or so, you'll start to see this change. And I think in 3 or 4 months' time, we'll be talking much more about EVs again. And so from two-wheelers, I'd say broadly we like four-wheelers, but within two-wheelers, even if you're considering that area, you have to look at those companies that face less of that risk and are more diversified.
I was just going through this Warren Buffett AGM Q&A, and he was asked a question on autos, and he just said it is just too tough with EVs, etc. You don't know who's going to be the winner, etc. And I remember there's another person we speak with, Samir, who has a pretty similar view. I mean, but his view is that whatever is the bigger global trend, I mean, why it would be true here in any individual market as well. Although dynamics in the US and India are very different, penetration levels, etc., very different as well. And of course, Abhiram making that point that yes, there is that disruption from EVs as well. Abhiram, so let's just talk about banks for a quick bit. I mean, I think like the third quarter, banks is where most of the earnings upgrades are coming from, financials broadly. So that continues, even though there is 1 or 2 disappointments as well. I mean, a few PSU banks have disappointed. Federal Bank was not all that what market hoped for. Your thoughts in terms of what's buyable there and what do you like, basically?
First, let's kind of take a look at the big picture situation, which is the credit growth number still seems to be very decent, upwards of 15%, which means that there is solid demand in the market still. The other thing is that there's a good chance that central banks around the world have paused, including the RBI. So I think the overall picture for banks is still quite healthy. Bear in mind also that corporate balance sheets in India have not been as healthy in a long time, maybe as much as a decade. So overall, the picture on banks is still good. What may happen going forward is that NIMs may have peaked. That said, there's growth, and the growth should, as you keep rolling over growth, I think you still find value in stocks. So we still like the large private sector banks, but we've also kind of diversified a little bit more to look at the smaller companies, certainly those in the NBFC side as well. I think that the sector as a whole is quite healthy. We are quite overweight on that space. And like I usually do, I also mention insurance companies as well. And I think those stocks have actually taken quite a bit of a hit. In the last month or so, they've started to recover. I think the story there from a long-term perspective is still very interesting, still in an under-penetrated space, et cetera, et cetera. So financials is probably our most overweight sector today.
Abhiram, short conversation, but we've got a management waiting by to chat with us on the show. Thank you very much for joining in. Before we get chatting with the management of UPL, let's go across to Nimesh, who's going to join in with D Street Chatter. Nimesh.
I can't hear.
Nimesh, can you hear me?
No, I think he said he can't hear, so we'll get back to him in just a bit out there. For the time being, though, I'll tell you what, let's slip into a short break. You come back, and Nimesh will be joining us on the other side. Welcome back. Well, Nimesh can hear us, and he's with us for our special segment, D Street Chatter. Nimesh, a good session, good bounce back. What are you picking up?
Hi, Nigel. It's a good bounce back, largely on back of FR buying as well as short covering as well. So that clearly, sums up the way we've covered most of the Friday's losses in today's trade. It's largely led by financials. The Nifty bank is up 1.5%, and there is buying as well across bank stocks, ex of HDFC Twins. That's the overall feedback as far as flows are concerned. Now, technically, we are at the upper end of the resistance, which is 18,300. So that's the level to watch. If that gets taken out, you could further see short covering in the broader market. So that's overall feedback. Even in the mid cap and small cap, there is a lot of action picking up. The volumes are on the higher side, and it looks like there is participation as well from the HNIs and retail investors. So the broader markets are doing good, but I guess in the large cap, it's a combination of FI buying as well as short covering as well, which has helped to recover all of Friday's losses.
And what about individual stocks? What's on your radar?
Well, in terms of individual names, the first stock on my list today is Century Textile. That stock is buzzing in trade and on good volumes as well. I believe one of the domestic PMS is an active buyer, and hence a big move in that stock in today's trade. So that's the first one. The second stock is Indian Hotels. For the last many days now, there is a good amount of accumulation happening in this particular stock at NFI desk. In fact, the stock is up 10% this month itself, and on good volumes as well. So Indian Hotels post earnings has seen a big run up, largely on back of FI buying. So that's the second one. Third stock is Page Industries. Again, this is one stock where quietly some bit of accumulation is happening. I understand a leading long-only fund is an active buyer at a price limit, but that fund is an active buyer, and hence Page is buzzing off late. And the last stock is Dollar Industries. In this particular stock, the stock is moving up in today's trade. It's almost bounced from 52-week lows, largely because a large selling pressure from a domestic mutual fund seems to be largely over. I guess today was the last low, and hence after that selling, you've seen a bit of uptake in Dollar Industries as well in today's trade.
All right. Innerwear is the theme in terms of stocks that Nimesh has on the list today to watch out for. Page and Dollar both there that he's highlighting. We'll watch out for these names. Just under 200 points on the Nifty is what we have, 18,267. Now, the much-awaited Berkshire Hathaway AGM was held over the weekend, and legendary investor Warren Buffett, along with Charlie Munger, gave his views on a whole host of matters, including the banking crisis, the US dollar. Listen in to some of what they had to say.
Owning banks, events will determine their future, and you've got politicians involved. You've got a whole lot of people don't really understand how the system works. And I would say that you've had something less than a perfect communication between various people and the American public. So the American public is probably as confused about banking as ever, and that has consequences.
Well, let's get chatting with the management of UPL. They've posted a weak set of Q4 numbers. Top line below estimates. Net profits have seen a decline of 43%. This is on account of a sharp correction in the company's margins. EBITDA margins at 18.2% has fallen by nearly 450 basis points on a year-on-year basis. Mike Frank, CEO of Global Crop Protection Business at UPL, is with us on the show now. Mike, first, could you talk about this margin decline that we've seen? How have crop prices trended in the quarter gone by in Q4? Is it on account of excess supply that we're seeing from China? And what's the outlook on margins in Q4? In Q1, I'm sorry.
Hi, yes, good to be with you. So if you just step back and look at the full year picture, we delivered very healthy 16% revenue growth and 10% EBITDA growth. Obviously, the first 9 months we saw strong EBITDA growth along with revenue growth. And in the fourth quarter, it was a very unusual quarter. As you said, coming out of COVID in China, what we saw is the post-patent manufacturers of active ingredients in China really increase their overall productivity and supply into the market. And as they did that, prices started to decline. And as prices started to decline, it really froze distributors from buying products when they saw the price was moving quickly. And so as the quarter played out, we saw that prices came down almost on a daily basis in the last part of the quarter to where they are now. We took very aggressive actions. Firstly, we made sure we competed for shelf space and we got our products on the shelf of our distributors, and so we competed aggressively. And we also really managed our inventories to make sure that we liquidated our high-cost inventories and we slowed down our production plans so that we wouldn't end the year with more inventory or more high-priced inventory. So generally, we're very pleased with how we performed in this very challenging quarter. And in particular, the post-patent segment was the segment that got impacted the most.
All right. Hi, Mike. Good afternoon. We take that point on board. So the high-cost inventory, most of it is out of the system, which should spell good news in the coming quarters. Give us a couple of details in terms of a guidance. For the last year, you achieved more than what you set out in terms of revenues. Though on the EBITDA front, it was lagging a little bit. So I want three broad numbers for you. One, what is the revenue guidance from year on growth, the EBITDA guidance, and net debt reduction? Please go ahead, Mike.
Yeah, so last year on overall guidance, we achieved and beated our net revenue guidance. We underperformed on EBITDA, again, really based on the fourth quarter, and we're very pleased with the cash generation that we had in the business. And so we were able to pay down over $600 million of gross debt, over $440 million of net debt here at the end of the year based on that strong cash generation. Now, as we look ahead to FY24, at guidance, we're guiding on revenue of 6 to 10%, on EBITDA of 8 to 12%. And again, we're expecting a very healthy cash generation from the business. Now, this year, unlike last year, we're not going to make a guidance on paying down net debt. We're quite happy with the current leverage that we have. But as we generate excess cash in the business, we'll make decisions as the year unfolds in terms of the best way to put that cash to work.
Mike, hi, good afternoon. So as compared to FY23, the guidance that you're putting out, and these are consolidated numbers, right? 6 to 10% revenue and 8 to 12% EBITDA growth. This is muted in that sense, right? As compared to what you've done in FY23. So is this on the back of the crop business continuing to be under pressure? I mean, if one looks broadly at weather forecasts, etc., as well, I mean, they're not very good. Could you explain?
Yeah, so firstly, let me take the last part first. From a weather perspective, obviously we have a very global business. Last year we had weather impacts in Argentina, largely in southern US and in parts of Europe. And so every year we do see some impacts from weather. As we go into this next year, this part of the world could be a little bit wetter, but generally we expect actually a benefit on a year-over-year basis from a weather impact standpoint. Also, if you look at grower margins are still very healthy. So we would expect farmers around the world to want to maximize productivity and also maximize their sustainability outcomes. And that's where UPL plays such an important role with both our conventional crop protection business, but also with our differentiated and sustainable solutions. we're in the midst of transitioning our portfolio from being dominated with post-patent products, which in FY23 was about 72% of our sales, to when we look ahead to FY27, we believe our portfolio will be roughly split 50-50 between post-patent products and differentiated and sustainable solutions. So we do expect, as FY24 starts, that some of those challenges with post-patent prices that we are seeing in the market today, those will persist, at least in the first quarter or two. But again, our objective is to run our factories, to compete very aggressively in that segment, to gain market share and move increased volumes, and then to grow our overall differentiated and sustainable solutions throughout FY24.
Mike, you're saying pricing pressure in post-patent products will continue in the first half of FY24? That's your estimate?
Yeah, we would anticipate that. We're seeing it already in our first quarter, that we would anticipate for at least the first quarter and probably the first half that these new competitive pressures will continue to play out. Look, it's hard to predict over time the price of post-patent products that are going to come out of China. What I'm telling you is that we have a very good cost position based on our manufacturing capabilities here in India, and we will run our plants, we'll compete aggressively, and we'll grow our volumes in that segment, regardless of what the price is going to be.
All right, Mike, there's some uncertainty out there, but besides the operational performance, there were some news reports that indicated that maybe the UPL promoters, they could look at exiting the business. And these sort of rumors keep coming up. Now, you work closely with Mr. Shroff, and I was hoping that he joined on the show, but he hasn't. What's your sense on it? I mean, is there any discussion of any sort? Is UPL on the block?
No, I would say there's no discussion, and I think if you look closely, you'll see that the promoters are continuing to increase their ownership in the company. And so, yeah, working very closely with Jay and his family, they're very committed to the business. They're very committed to growing the business, and so I would say those rumors are simply just that.
Right, so you're clarifying that the company is not on the block. That's good news. But as you said, the promoter entity, they have gradually been hiking stake. Now, in the last year or so, if I look at it, they have hiked stake by nearly around 5%. Do they have a targeted holding out there? It's around 32.3% as of March 2023. What does Mr. Shroff have to say? Does he want to take it? Does he have a target in mind? Because, valuation-wise as well, it's not been getting those elevated multiples. So maybe if the promoter shows more amount of faith, takes his holding higher, the street gets more excited and gives it a higher value. Your take, do you have any number out there?
Yeah, look, I mean, if you look at the fundamentals of our business, we have an incredible business. We generate significant free cash flow. I think when you look against our peers, our multiples are much lower than our peers. And so I think there's a lot of opportunity for multiple expansion. And we've got a great growth story in the years ahead. I think you'd have to ask Jay himself in terms of his objective, in terms of what percent of ownership they would like to have. But I can tell you our business is extremely strong, and we're going to continue to drive growth in this business and generate free cash flow.
All right, Mike, thanks so much for giving us an insight into business, how you see things panning out. You're clarifying as well that as per what you understand, the company is definitely not on the block. And please do convey to Mr. Shroff, we would like to know where exactly does he want to take this holding. He's been creeping into the shareholding, so maybe we get an update from him next time around. Look forward to chatting up with you in the coming weeks and wishing you a good FY24. Well, let's focus back on the markets. When we were having that chat with Mike, actually, we've come off a little bit from the top. I mean, nothing to worry, but 18,250, we were looking like maybe we'll get past the 18,300 odd mark. But for the time being, we've come off a little bit from the top. So let's get in Mitesh Thakkar back with us. Mitesh, what are the trading ideas you have for us, the buy or sell calls?
Yeah. Nigel, two Tata Group stocks, Tata Motors and Tata Consumer, both gave a continuation breakout today. So BTST Tata Motors with a stop at 494, targets of 507, 510 here. And Tata Consumer, I think similar kind of a call, similar kind of a setup as well. BTST here with a stop at 782 for targets of 800.
Okay, got those. Mitesh, thank you very much for that. Let's shift our attention now to our special segment, Earnings Corner. In this segment, We'll tell you what are the key earnings to track for this week. To name a few, for today, it's Pidilite, Mahanagar Gas, Aarti Industries. They're expected to report their numbers post-market. Tomorrow, the big numbers to track will be from SRF, Lupin and IGL. On 10th of May, that's a Wednesday, the big numbers are Dr. Reddy's and L&T. On Thursday, 11th of May, Asian Paints, Eicher Motors and Siemens are a few names to watch out for. And finally, we get to Friday and the big number to track will be Cipla and Tata Motors. Okay, so from tomorrow's list, let's find out what the expectations are from SRF. Sonal is here for more. Sonal.
For SRF, it is expected to be a slightly weak quarter this time around, mainly led by their packaging and technical textile segment. So while overall revenues are expected to be up 6%, EBITDA is expected to decline by 2%, margins are expected to decline by 200 basis points, leading to a profit decline of 7.5% to come in at 560 crore rupees. Now remember, for last couple of quarters, SRF has been beating estimates on all parameters, especially led by the specialty segment, specialty chemical segment. And this is something which is expected to do well in this quarter as well, where the revenue growth in the specialty chemical segment is expected to be 28% on a YOY basis. However, weakness will continue in their packaging and technical textile segment. So analysts, they are expecting a 5% fall in packaging segment and a fall of 2% in technical textile revenues as well. And these two segments are the ones which will lead to the fall in EBITDA as well. So any management commentary on how these two segments are doing and what is the outlook on growth, especially that we are entering into FY24, will be the key to watch. But yes, for quarter 4, it is expected to be a muted quarter for SRF.
A muted quarter from SRF is what we are factoring in. Thanks so much for that, Sonal. But Lupin as well will be reporting their numbers tomorrow. Ekta's with us to tell us the top 5 expectations from these numbers. Ekta.
Thanks for that. Well, on a year-on-year basis, expect revenue to grow by around 5 to 7%, EBITDA to come in at around 510 crores with a margin of around 12% versus 7% and a profit of around 156.8 crores. Now, the numbers will be supported by a low base because Q4 FY22 EBITDA was down 63% year-on-year. Margins came in at a multi-quarter low of around 6.9% and there was a loss on account of impairment as well. This quarter, the revenue of around 7% growth is expected to be led by the US business because of the bowel drug Suprep generic actually managing to pick up some amount of pace and offsetting any kind of decline from the flu products. Estimates are that the company could make $180 to $192 million versus $177 million on a Q-on-Q basis from the US. Domestic market likely to pick up pace versus Q3 when it was up around 3.3% on a year-on-year basis. Margins, like I mentioned, should bounce back from that multi-quarter low on a year-on-year basis. Q-on-Q, it's expected to be flattish at around 12%. Commentary with regards to the inhaler drug Spiriva generic will be watched out most closely, considering that the target action date or a possible approval timeline from the US FDA was expected or is expected in the next couple of weeks. So that's going to be something which is going to be extremely critical, probably even more critical than the numbers themselves.
All right, Ekta, thank you very much for that. So some earnings which will be with us tomorrow. Now, Hemang Jani, Motilal Oswal Financial Services is with us. Hemang, good to have you with us here. Thank you very much. I just want to start with your thoughts on ABFRL with the transaction that we saw. What's your sense? The track record of acquisitions has not been particularly great. I mean, maybe the company, perhaps I could widen that to the group as well. And then we've got this. The stock, by the way, is back at where it was in 2014, 2015. So it's not done well at all. Your views?
Yeah, good afternoon, Prashant. I think the fact of the matter is that the retail overall space has gone through a lot of turbulence in the last 2 years, and that also played some role on the ABFRL's performance. But what we feel is that this kind of an aggressive, buyout definitely is going to put some, strain on the balance sheet. And though we like this particular name and they have successfully acquired certain brands and the overall balance sheet wise, they are extremely well placed. But we think that, in the intervening period, till we see the numbers come through in terms of the, top line and profitability, there is going to be some sort of a drag because of the size of the acquisition that the company has done. So we do like this name, and we have a buy rating on it with a price target of about 280 rupees.
Hemang, the big talking point over the weekend was ONDC and how it's executed, I think, some 10,000 daily orders. Is this a big risk for Zomato? You all had recently initiated coverage on Zomato. So your thoughts on the potential impact, the competition coming in from ONDC?
So, Rima, we do see ONDC as an emerging risk for the companies like Zomato, as these companies' success depends upon the tight ecosystem that they develop. And as ONDC customers, they are able to scale up, there is going to be some sort of a pressure. And even for restaurants, ONDC is a better option because they get to pay much lesser fees versus what they end up paying to the platform. So, Zomato definitely enjoys the privileges because of the large, base that they have. But depending upon how the alternatives like ONDC scale up, there is going to be some threat to it. So, we will have to wait and see how this entire thing pans out. But at least in the near term, let's say over the next 2 to 3 years, we don't see any material risk to the overall growth that Zomato is reporting, particularly the EBITDA margins and the earnings part. So I don't see this as a major risk for the company at this point.
All right, Hemang, just hold on to that thought. By the way, from the broader markets, pull up delivery. Stock is up 5.5%. Majority of that move actually has come in the last few minutes itself. So I think that one should come up for you on the screen. And GET&D as well. That's another one that's buzzing around. So there is some traction in the broader markets. India Glycols as well, another one that's spiked up in trade. So quite a few of these names are moving around, though we're looking at the headline index, whether we get to 18,300, 18,500 or make fresh all-time highs. But there are select stocks that are doing very, very well. Case in point being even a Newlands Labs. That stock, I remember it had gone, it was down and out closer to around 1,000 rupees odd. In the last few months, it's made a bit of a comeback as well out there. Hemang, I wanted to ask you about one of these frontline names though, IndusInd Bank. There is some rejig at the top. One would have thought that there was a bit of a rumor, a buzz as well that went on in the last few days. The stock ended low and fell in sympathy with HDFC Group on Friday, but today it's bounced back in style. Your view on the stock?
So, Nigel, overall, we have a positive view. In fact, in the second tier or, smaller banks, this is our preferred pick. The numbers have been pretty good. And I think the weakness that we saw on Friday was probably because of the overall weakness in the banking, names, and maybe this, news about the resignation of the chief risk officer. But we don't think that there is any material, risk to the overall, position that they have. And valuation-wise, it is very comforting at about 1.6, 1.7 time price to book. So we have a positive view on IndusInd Bank.
There may be fresh concern for yet another airline in the Indian skies. This is SpiceJet that we're talking about this time. We understand that there's an insolvency application that has been filed before the NCLT against SpiceJet. Now, what are the details? The details from what we understand is that an aircraft lessor by the name of Air Castle Ireland Private Limited has moved the NCLT. They're claiming unpaid dues, they're claiming a default, and on the back of that have moved a Section 9 application. Under this Section 9 application, they're essentially seeking for initiation of the CIRP proceedings against SpiceJet on account of those unpaid dues, on account of that default. Now, what we understand is that the NCLT Delhi, this is the principal bench of NCLT Delhi, has number one, agreed to hear this application, and number two, has issued a notice to SpiceJet, to the airline, to come back with a response to the Section 9 application that has been filed by the aircraft lessor, Air Castle. Now, a brief window has been given to SpiceJet. SpiceJet, beginning today, has about a week's time to address some of these concerns and to understand whether or not there is any room for negotiation, if there are talks that are already underway, if there is some resolution in sight, or that they will be opposing and objecting and fighting it out before the NCLT. So a week's time for SpiceJet to clarify on their position as to what the situation looks like going forward. May 17th is when the NCLT Delhi will resume hearing in this case, and that's when we'll begin to get more clarity on the way forward.
Okay, all right. Thanks a lot for that, Ashmit. Hemang, how you see this panning out? From a consumer perspective, not great news at all for us. Fares are going through the roof. But from a listed perspective, there's just one way to play it, right? InterGlobe Aviation. It's at around 2,200. And from the time this news has come out, it's already up 4 to around 5% as we speak, currently at the high point of the day. How do you approach it?
So clearly, Nigel, great news for the incumbents, particularly Indigo, because it is not just about a 7 or 8% market share, but it's about the price that they would get on the existing 50% market share because of the fact that you don't have any competition as such. Coupled with that, you have a crude oil price which has corrected quite sharply in the past 2 days. So as we are stepping into this holiday season where airports are full, traffic is growing, I think this kind of a news is the best news for Indigo. So from a technical perspective, I do think that there can be some more upside for Indigo.
Hemang, what about Paytm? For the last couple of months, the company itself has been talking about its path to profitability. Analysts too have started turning a bit bullish about the prospects of Paytm and growth from here on. Where do you stand on this stock? Are you bullish on it at current levels?
Absolutely, Rima. We had an initiating coverage report very recently. The numbers that the company announced definitely are extremely good, and on a month-on-month basis, we are seeing traction in terms of the GMV, even on the loan products, which is highly profitable. All their 3 products are seeing very good traction, and we are seeing that there is an upgrade of almost about 80 to 100 crore on the EBITDA post the numbers. So extremely positive on a Paytm at this point of time.
Extremely positive. Have we discussed IndusInd Bank? Okay, I think we did. So 11:28 on IndusInd is what we have. Anything in the financial space? I was talking with Abhiram about home finance companies. So let me pose that to you. Abhiram did not have any particular views. These smaller home finance companies, Aptus, Home First, Aavas Financiers, they're very small companies, but obviously because of that very high growth rates for many quarters on end. We, for example, had the Home First management last week with us, and they said we can easily conservatively grow at 30% for many years to come. There is this, since these are all sort of mostly PE owned, there is obviously this fear that maybe some of them will come and sell, but that will happen when it happens. Do you like any of them, Hemang?
So, Prashant, we have a very interesting take on this entire NBFC space. What we feel is that the housing finance companies would have some issues because of the way the entire rates have moved up in the past, let's say, 1 year or so. Also, you have an additional supply risk that can come at any point of time. And if you can see last 1 year, these companies have not delivered. Versus that, if you see some of the companies like Mahindra Finance or, some of the auto financiers, they are reporting much better numbers with slight improvement in the asset quality. Even NIMs are holding out pretty well. And they are also available at a very reasonable valuation. So we would rather go with some of the auto financiers like Chola and Mahindra Finance or, a couple of them, rather than going for smaller housing finance companies in the pursuit of better growth, because, you are going to have some issues whenever some big PE investor decides to exit.
Should be temporary though, right? I mean, but they owned large chunks, so yeah, could be meaningful overhang. But growth is there. I don't think there's any doubt about that. Hemang, thank you very much. We leave it there. Appreciate you joining in and running us through what you make of the markets today. Well, things are looking good, and things have been looking good all day, and we're going to end on a very positive note. Back above 200 plus points, 210 actually. 18,278 or so is where we're going to end. We should not be very far away from the day's highest point. The high today is 18,286, and we are about 10 points or so away from the day's high. Let's just see if there is any large oversized influence on what the Nifty did. So Reliance is single-handedly the biggest contributor to the gains today. 25 points coming in from RIL. HDFC Bank adds 22 points. I think it subtracted a huge deal with that large fall of 5% on Friday. ICICI Bank is at number 3 with a 20-point contribution, and then there is Bajaj Finance with 17 points. So financials plus RIL doing bulk of the heavy lifting. HDFC, by the way, is also there at number 6 position with a 14 index point contribution to what we had today. In terms of absolute gains, IndusInd Bank stands out. So IndusInd lost 5% on Friday. It's back up 5 today. Tata Motors with a 4% plus gain. I mentioned Bajaj Finance, but Bajaj Finserv was doing well as well. And I think you had ONGC, which participated on the Nifty. On the downside, there is Coal India, Adani Enterprises and Sun Pharma, 1%, 1.25% losers on the Nifty. Rima.
The street is going to be watching out for numbers from Tata Motors, which comes out later this week, and M&M, because up until now, the auto numbers have been fairly strong, whether it's Bajaj Auto, TVS Motors, Hero MotoCorp is also a good showing. So now all eyes will be on Tata Motors, and that gained nearly 5%, and M&M too, higher in trade. IT had a good session led by HCL Tech, so that was one of the big movers. Britannia gave up most of its early morning gains, so it opened up slightly higher at record high levels, but from there it's seen some profit booking. So that stock was down close to about 0.5%. On the mid-cap end of trade, there were lots of earnings reactions. In fact, the Nifty PSU Banking Index, by the way, ends in the red with a cut of nearly 0.8%. So even as many of the private sector financials did well, like IndusInd Bank, the HDFC Twins, PSU banks struggled in trade. So on the losing side, you had Bank of India down nearly 6%, Union Bank losing about 3.5%. TCNS Brands, that was the big loser today, down 20%, and Aditya Birla Fashion also nearly down by 5%.
Well, it was a beautiful trading session, Rima. Not just we are going to end close to the high of the day. In the last 1 hour or so, we did see the Nifty actually move lower, but that quickly got bought into. So it's a beautiful trading session. Few stocks that did very, very well. ADF Foods up close to around 12% in reaction to its results. Jacket, JTKD, in fact, that did very, very well, up close to around 11% in trade today. A couple of other notable movers were RateGain, which was up close to around 9.5%. You had AGI Greenpack. Remember, it was up 20% in reaction to its numbers. It was up another 10% in today's trading session. Triveni Turbines as well was up and about in today's trading session. A couple of positive news flow that came on select companies like Patel Engineering. You had Penard Industries as well. Both of them did see a big surge in today's trading session. Well, on the flip side, though, you had a few stocks that got knocked back in trade today. So just highlight a few. NCC, it's looked rock solid, but that pulled back a little bit. Union Bank was down close to around 3.5%. And Canara Bank as well. We'll speak to the management tomorrow. But today, in fact, that stock was down 1.5%.
Well, with that, it's a wrap and closing bell. Thank you very much for watching.